In this video, we're going to discover some of the most significant key levels for trend trading the Forex markets. We're going to test 3 different breakout levels across 14 of the larger Forex pairs to see which ones work the best and which ones work the worst. And it's important to find out which ones work the worst for 2 reasons. Number 1, so that we don't actually use those levels for breakout or trend trading. But number 2, they could work so badly that we could actually use them for the opposite. We could use those levels for reversal trading. So this video is actually part 1 of 2. In this video, we'll look at trend trading or breakouts, but in the second part, we'll look at key reversal levels. But for now, we're going to be using stop orders to get us into trades in the direction of the trend or the direction of the breakout. The breakout levels which we're going to be testing are really simple. And they don't require you to draw any subjective support resistance lines or Fibonacci retracements or anything like that. They're simply highs and lows over a given time horizon. When I create trading strategies from scratch, I'll often start with some kind of test like we're going to be doing here today. And once I get a better understanding of how that market responds to certain price levels, then I can ascertain whether there's an edge big enough there to exploit and turn into a trading strategy. For example, over the years, I've built many strategies on dollar-yen, which buys into strength and shorts into weakness. And the test we're going to do today will back up why that approach works on that market. So let's have a quick look at some trade examples so you know exactly where to find the levels, and then we'll get into the test results. The 3 key levels which we're going to be looking at are the daily, weekly and monthly highs and lows. So the way we're going to be testing this is we're going to be buying if we get a breakout of the daily high and sell short if we get a breakout of the daily low. And then we're going to do the test 2 more times using the weeklies and the monthly highs and lows. And this is a stop and reverse strategy. We haven't actually got any specific exits. We're just exiting from a long trade when we get the signal to go short and vice versa. So let's just quickly look at what that looks like on the chart. Here's an example. I haven't actually given you a time frame here, but these bars could be dailies, weeklies or monthlies. And if we start on the first bar here, this bar here closed and here was the low, and then on the next bar the market opened and it broke down through the low, and that's where we shorted at this level here. We don't go long, or we don't exit the short and then go long until we get a break of the last bar's high. And we got that here, where here was the high and the market opened down here, and then we eventually broke out above the high here. Notice we didn't get a long trade here because we didn't break above this high, and we didn't get a long trade on this bar because we didn't break above this high. So now we're in a long trade, and we don't exit that long trade until we get a break of the previous low, which we got on this bar here. Here's the previous low, market opened here, and at some point broke through the previous bar's low there. And like I said, these bars can be dailies, weeklies or monthlies. Now the testing I'm going to be doing is using Oanda data back to 2008. So we're going to start January 2008 through to May 2023. All the results we're going to be looking at are going to be in pips rather than the currency value. And there's no stop loss or position sizing or anything like that. The tests are purely because we want to see how the price responds to these breakout levels. And once we've got the results from the 14 different pairs over the 3 different levels, I'll be putting those results into the free Forex strategy database, the database which we're building here together on YouTube, so that you can go and reference different strategies to see what works on what markets and what doesn't work on what markets. I'll leave the link for the free strategy database down in the description of this video. So let's have a look at the results from the first test, which is using the daily highs and lows. Here we can see the 14 of the Forex pairs we're testing, and you'll probably notice that I've got it on a 60-minute time frame. But don't take too much notice of that. It's just the way that I've programmed the computer to run the tests. I've actually programmed the strategy here, and I've got this input which I can change called my time frame, and I can go from 1 to 3, 1 being the daily chart, 2 being the weekly, 3 being the monthly highs or lows. We can still reference the highs and lows from the 60-minute chart. It's just the way that I've got the strategy operating. Okay, so let's have a look at the back test. This is the backtest for the portfolio of the 14 Forex pairs combined. It's making a lot of pips, 17,800. And the equity curve is not bad actually for a portfolio of the Forex pairs. But we're more interested in the individual behaviour of the markets. Australian dollar, US dollar, not making much money. Canadian, Japanese yen is making some money. The equity curve's not that great. Euro pound is making money. Most of that money was made in early years. The rest of it is just pretty flat. Euro yen is making money. Didn't do very well in the early years, but did do well later on. Euro New Zealand is losing a lot of money, so that equity curve's kind of all over the place. Euro dollar is making some decent amount of money, and yeah, the curve isn't bad at all. So euro dollar on the daily time frame, or trading the breakouts of the daily highs and lows, does work quite well. Pound Canadian dollar works terribly, quite nicely but terribly, so that's definitely something we might look at for reversal trades. Pound US dollar is working well, and the equity curve isn't great, but it's definitely working. New Zealand Canadian dollar is working terribly. Again, another candidate maybe for reversal trades at these levels. New Zealand US is making a little bit of money with an irregular equity curve. US dollar Canadian is all over the place. US dollar Swiss franc is kind of all over the place. And the last one, looking at the daily highs and lows, dollar yen, which is a very nice equity curve, considering there's no other rules to the strategy, there's no stop loss or anything. Just buying the previous daily highs and shorting the previous daily lows works very well. However, I imagine the size of the average trade is probably not that large. 6.8 pips, that's not bad. We would have to consider at what time of the day these trades are taking place. If we were to introduce some sort of filter where we weren't trading around the open close of the session where the spreads are really high, then this strategy might still make a bit of money even after we've paid some spreads and commissions. So dollar yen, certainly from an equity curve point of view, is the best one, looking at buying and shorting previous highs and lows on the daily bars. Straight away we can see that some markets respond very well to buying breakouts at those levels, and then some other markets respond very badly, and perhaps we should be using those levels for key reversal points. Pound yen and dollar yen both worked very well when buying highs and shorting lows of the previous session, whereas pound Canadian dollar did really terribly. Next, we're going to look at the weekly highs and lows. And I expect we'll get less trades because we're looking at a slower time frame. But I expect the trades will be more significant, meaning we'll be making more money per trade. But just before we do that though, if you're looking for some more easy to trade rule-based strategies, then you should probably take a look at my 22-page Beat the Markets Strategy Guidebook. I think you'll find it really useful. And at the moment, if you find the link in the description down below, you can get it for free right now. So you can immediately download that. If you're looking for some even better strategies, then you probably should take a look at my popular trading course. And actually, I include 6 strategies, but one of them happens to be a breakout strategy on dollar yen, because we've seen how dollar yen likes to respond to breakouts. You can find out more about the benefits in that course, also with the link down below. Now, let's go and have a look at those weekly highs and lows. Okay, looking at the weekly highs and lows, you'll notice that I've changed my input in my strategy to 2, which references those weekly levels. Let's have a look at the backtest. Here we can see the backtest over the 14 Forex pairs in a portfolio, and it's losing a lot of money this time. Equity curve is all over the place. But let's look at the individual markets. And straight away we can see a lot of losing trades this time. We'll quickly run through looking at the equity curves. Australian dollar, US dollar, Canadian, Japanese yen, Euro pound, Euro Yen, Euro New Zealand, Euro Dollar, Pound Canadian. Pound Yen is actually making money, it's making the most money. And it's not a great equity curve, but it's definitely moving in the right direction. Pound US dollar is making money, but the equity curve isn't very good. New Zealand Canadian losing money. New Zealand US losing money. US dollar Canadian losing a lot of money. US dollar Swiss franc all over the place. And lastly, US dollar Japanese yen is making money again, but the equity curve isn't as nice as when we're buying and selling breakouts of the daily highs and lows. So the vast majority of the markets here are losing money, looking at that bigger time frame, looking at the weekly levels. And lastly, we can see I've changed my input to reference the monthly highs and lows. So let's have a look at the performance report. This is the complete portfolio, not losing as much as last time on the weeklies, but it is losing with a really bad equity curve. Looking at the individual markets, we don't have quite as many losers as we did when we were looking at the weekly highs and lows, but let's run through them. Australian dollar, US dollar, Canadian dollar, Japanese yen, Euro pound, Euro yen, Euro New Zealand dollar, Euro dollar. Made a lot of money in the early years and then just went flat. Pound Canadian, still a big loser on the monthly highs and lows. Pound yen, making money but virtually nothing. Pound US dollar, New Zealand Canadian dollar, New Zealand US dollar, US dollar Canadian, US dollar Swiss franc, and finally US dollar Japanese yen, still making money on this time frame too. So US dollar Japanese yen was the only one that actually made money on each one of the breakout levels, whether it was the daily highs, daily lows, weekly highs and lows, and monthly highs and lows. While I haven't given you a fully working trading strategy today, what I have done is I've given you an insight into one of the methods I use to begin to build a trading strategy from scratch. And in some cases, like we've seen on dollar yen, we've almost got a working strategy with just what we've done today. We will probably add some things like a stop loss and maybe some few filters to refine it. But from our testing today, we've seen the vast majority of our tests were negative. So next, in part 2, we're going to be using the same 3 levels and we're going to be taking reversal trades rather than trend trades. If you prefer reversal trades, then hang around, wait for the next video, or if you're just curious, then also just hang around and that video is coming next. I hope you've learned something today and enjoyed the video. If you have, please give me a thumbs up. And if you've got any comments or questions around what we've done today, the testing that we've looked at, then please let me know in the comments. I hope to see you next time in part 2. But until then, this is Jared Goodwin, and thank you.